ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. When I think of silver, I think of the word asymmetric.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
And as far as silver is concerned, I think that there's a high probability that what we've seen really, as far as I'm concerned, since June 12th, with gold down about $100 and silver down about $1, is not a reaction. It's a strategy. It's a strategy that is implemented in the form of a methodical decline. And that decline started Sunday night. It hasn't stopped. This is being done by the bullion banks who want you to believe the narrative that it has to do with, the ceasefire and moving from, risk off back to risk on. This is price suppression, period. And I say that to you for the biggest reason is that tomorrow is option expiration on COMEX. And Friday pushes the front end month, July, silver contracts into delivery. So there's a lot at stake, the end of month, the expiration, and the July silver contracts which go off the board. You have the second largest short position by the banks in silver in the history of the COMEX market. So, in fact, I said this on a couple of podcasts that I expected there to be a pullback into the weekend as a result of this. My guess is Monday you would see things move the other direction, perhaps Tuesday, simply because you have this big deal happening on Monday. So with the end of the month contracts moving off the board and first day of notice for the July contract. But look, as far as what's happening, people I think are too reactionary. They think too much in the moment. The bigger picture was looking very positive for gold and silver long before this 12-day war that we've now seen in Israel and Iran. So, I think it's has less to do with geopolitical events and more to do with commercial bank positioning right now on COMEX, and they have to push it down right now because of this massive short position. If not, you're talking existential threat to the survival of some of these banks who have this massive short position. So I expect it to be short-lived and then resume its upward trajectory the way it had been going for the past several weeks now. I think they're doing it in gold already. They're beginning to mitigate in gold. It's like they're losing control. But they want you to believe that this is a safe haven unwind, that the only reason that they've gotten this high is because of the tensions in the Middle East. And they forget that it had been going that high long before this. But yeah, I think in general what you're witnessing is maybe the realization by some of these banks that being short and having to use this much ammunition to hold down the prices is silly. Since Trump was elected, Jared, there's been over almost 820 tons with a T of gold have stood for delivery, and almost 9,000 tons of silver. This surge of deliveries into COMEX warehouses is crazy, and this is long before we've seen any problems with what's happening here in the Middle East. So at some point, when we see such physical demand, not just on COMEX, but in the LBMA and all around the world, I think continuing to be naked short is very silly. So I would like to think that we're getting closer to that, because it seems like we've already crossed that line with gold, where they're really not trying to knock it down quite the same way that they did. Now people look at gold, what's it down today? Let me take a look. You look at gold today and it's down $45. It sounds like a lot, but it's, it's a 1.5%. That's nothing. It's just that as the prices go higher, percentages seem bigger for sure. But yeah, I think that ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. Silver, on the other hand, across the board represents, in my opinion, value of a generation. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world. And why I say sophisticated is because the amount of deliveries coming off of COMEX is record-breaking. It's groundbreaking. And it's not an easy thing to do. These are people that are very connected, they're very smart, and when they're pulling off as much metal off of the exchange as they've been doing, where are they moving it to? And who's taking possession of it? And these are things that I think people need to think about. Who's got the ability to stand for delivery to that degree in gold and silver, silver in particular? The public, I think, Jared, is missing this largely, but those that have been buying have been focusing on silver or platinum. The thing to keep in mind more than anything right now is that they're panicking. They being the banks. They're trading over 350 million ounces of paper daily to suppress the price, Jared. And last I looked, somewhere around 960 million ounce short interest. You want to talk about the potential for a short squeeze? That's why you could have all but guaranteed the price was going to come down here leading into the end of the weekend because of the options expiration, the end of the quarter where, the LBMA and then the COMEX, these are important end of quarter numbers. And then, of course, the July contract rolls off the board on Monday, first day of delivery. And so all of these options, all of these derivatives, they're trying to keep the price down so that they finish out of the money. And then typically the way this works is that Monday afternoon, bang, it goes right back up.
Yeah.
This is just the same bullshit they've been doing for a long time. But one of these days they get caught with their pants down, the way that Bear Stearns did, which was largely why they went out of business, because they were on the wrong side of this. And so while we're really doing by playing this suppression game is playing right into the hands of the countries that are standing for delivery and the big players standing for delivery at subsidized prices. Eric Young, King Kong on Twitter says that the Chinese are part of this now too, because they know exactly what we've been doing, and they're like, fine, we'll beat you at your own game. We'll play the paper price, we'll suppress the price, and then we'll stand for delivery as well at stupid subsidized prices. So I truly believe we're coming to the end of this game, and the desperation that they had to use here at the second largest concentrated short position ever on COMEX in silver is evidence of that. So yeah, it's a good time to be switching to silver because all of these shenanigans that we're seeing and the shortness of availability is on the COMEX and the LBMA, where it's 8-week delivery delay. On LBMA, it's supposed to be 1 day. At some point, that has to spill over into the retail market. It hasn't happened yet, but it can happen very quickly with one spark, one event, one anything.
Many analysts now argue that global financial currents are accelerating toward a critical inflection point, one where US dollar dominance is steadily eroding. Mounting internal divisions in the United States, across political, social, and economic lines, are considered symptoms of a deeper systemic breakdown. At the same time, foreign powers are repositioning rapidly. The BRICS alliance is preparing to launch a cross-border payment infrastructure designed to include non-member nations, a move viewed as a direct challenge to the dollar's supremacy. Experts warn this shift is no longer a distant possibility, but an active transformation that could soon dominate global trade flows. Central banks, particularly outside the West, are increasing their holdings of gold and other tangible assets, signaling a move away from paper-backed systems and reinforcing the fragility of the current monetary order. Analysts also highlight how fiscal policies and economic narratives are being shaped more by illusion than integrity. With U.S. budget deficits spiraling and inflation metrics widely questioned, the foundations of monetary stability appear increasingly artificial. For instance, $90 billion in projected spending cuts amounts to less than 3 days of federal expenditures, barely a gesture in the face of trillion-dollar deficits. The global response has been quiet, but strategic. Reduced treasury holdings, rising
the way that the central banks have been accumulating, the way that they've been standing for delivery, it just feels like things are getting far more tense and tight everywhere, even in terms of this country, that something needs to break. This divisiveness that we see where, there's no common narrative any longer. Like we look at federal employees that are wasting and stealing taxpayer dollars is somehow a threat to democracy on one end, where President Obama deported over 5 million illegal immigrants and the left stayed silent, yet here you got Trump doing 20,000 convicted criminals and he's labeled a fascist. The double standards are staggering, and I think it's kind of like the end game where we're that far apart. So from a standpoint of unity in this country, of divisiveness, of something ripe for a change, people were talking not too long ago about a civil war. When you see all this stuff happening, the protests in these cities, and yes, I do feel like it's getting to that point where we're getting closer and closer and closer to some form of a reset, some form of, you see it politically, you see it socially, you see it morally, you see it economically, you're seeing it in the way that the world is breaking away from the dollar. You see it in the way that the world is accumulating commodities instead of, which is really the linchpin of the system in favor of treasuries. You're seeing so many things that are accelerating. When we talk about the BRICS in particular, it was Sergei Lavrov who came out and said that their new payment system, cross-border payment system, the bridge technology, would be offered to non-BRICS members. That's a massive deal. You have the BRICS meeting here in July. This is a very big deal. It's just a couple weeks away. So yes, we are getting closer to that all-in moment. I don't know what the trigger is, but you can feel the tension in the air. So yeah, and I think it'll catch us all off guard. Normally, when you look back at these things, none of us see the pivot. We never would have dreamed that what happened in 2020 would have been something even on our radar screen. But you look around and you have highest levels of indebtedness, lowest